Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and I'm here with my husband, Noel. He's in the background doing our graphics, running our cameras for us. And tonight is Ask a CPA Anything. So tax version. So any questions you have, seller support too. It's really open for anything. But I've been doing these Friday night shows specifically to answer tax questions because we are 5 days away from tax day. So I'm going to do one more of these next Friday. And then it'll revert to my normal Friday morning shows. Questions can go there instead of coming here. But if you have any tax questions, put them in there. I do have some notes of things we can talk about in the meantime while we wait for people to come up with questions. If you don't know me, really quick, thank you for sharing the show. If you don't know me, a little bit about me, I already told you my name's Tracy. I am a CPA. I have over 30 years experience. I am currently licensed in 2 states as a CPA. I've been licensed in 4 at one point in time. And I have a master's degree in taxation, and I have worked for global accounting firms. I've also have a history of being a CFO at a nonprofit. So have a little bit of experience behind me and what I bring to Whatnot here. And I'm on Whatnot. So hello, Erin. Hello, Crystals. So I am also on Whatnot as a vintage decor seller, and that's a little bit about me. So y'all, I just have to say, I just got to give the errands for there a shout out. He just sent me the sweetest message. I've been having one heck of a day today. It's just been a day. You ever have those? It's just a day. Maybe nothing really is wrong. It's just a day. And he sent me the sweetest message. And I read it just 10 minutes ago, and it really made me feel good. So thank you so much, Erin. Oh, well, hello, is it Nacho? Nacho Chasen? Welcome here. Oh, thank you, Erin. Welcome to Zoe's Treasures. And feel free, you guys, any questions you have, throw them in there. I'm just going to start talking a little bit just to kind of get the ball rolling. But feel free to put questions in. You don't need to buy anything. We do stream to YouTube. So if there's anything you miss, so you're like, hey, I really want to listen, but I got to go do something else, you can always go to YouTube and rewatch it at any time or just listen to certain parts of it. I am going to take all these words off the screen because they bother me. Hello, Southern Charm. All right, and that's it. There is a few things in the bin to take a look at. None of my vintage stuff, but my normal talk show PDFs and things like that. Again, you're under never any obligation to buy, but I do put them there during my talk shows. So what I was going to talk about tonight, because we're 5 days away, is first off, have you filed your taxes? I asked this morning, and we had the majority of yeses, so I was very happy. Hello, Tabitha. Hi, Monster Mama. Crystal's Vintage, you are rating the party of 8. Thank you so much.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Welcome in, everybody. If you're coming over with Crystal, my name's Tracy. This is Zoe's Treasures. It is Ask a CPA. Any questions you have. We're kind of focused on tax, but you could ask anything. It's open for discussion. We're all friends here. And Crystal, please. Put in, I know what you do. I know how awesome you are, but maybe other people don't. Please put in the show notes when your next show is, what you do. You guys, I can't give Crystal a plug. She does CVS training. So if you don't know what CSV training, that is when you can upload the spreadsheets into Whatnot. And when you're doing pre-listing, game changer. I totally recommend you go and see her, but she also does vintage decor. Oh gosh, I have so many questions. You're on finding someone who specializes in your own area, or could I use someone remotely? So when you say specializes, are you trying to find a CPA that specializes in like e-commerce or reselling? It's Crystal's Vintage Collective. I always get the last part of your name wrong. Crystal's Vintage Collection. So we will tag her. There she is on the screen, but my husband will also put her in the chat so that you can tag her. Or if she's here, she can say hello or something so you can easily find her. The Busy Bee says, I'm trying to bulk upload inventory pics and I have a headache now. Go see Crystal. The Busy Bee, go see Crystal. She's got you covered. She will walk you through step by step by step. She's amazing. So someone who's knowledgeable enough to understand some of the unique complications. Okay, so because I don't want to ask you a bunch of personal information here, so only share what you're comfortable with. When you say unique complications, I'm assuming you're talking about being a live reseller. If you're looking for a CPA in particular, you don't have to have a CPA to to do your taxes. You can just have a bookkeeper, you can have a tax preparer. It does not have to be a CPA. But if you're looking for the experience of a CPA, she does a Monster Mama. She provides excellent training. If you are looking for a CPA, they don't necessarily have to specialize in reselling or e-commerce. CPAs are trained on a multitude of things, and we're trained to be able to go into a business and pick up the processes, the systems very quickly. It's accounting is accounting across the board. There's basic rules to accounting that don't change no matter what business you're in. And when it comes to tax, the tax is tax. There's no different rules for e-commerce than there is for, selling on, selling in a store or any other profession. You could be a manufacturer or you can be a reseller. The tax rules are the tax rules. So you don't have to have somebody who specializes in it. What I do suggest is making sure that they understand at least the basics of e-commerce or of live selling. Because do you want grandpa who's 86 years old, who's never gone online in his life, advising you in tax? Probably not. So you at least want somebody who is up to date with what is going on, but they don't necessarily have to specialize. Now, if you have other unique circumstances, you would be surprised at a lot of the regional CPA firms have specialty niches. So it would just be a matter of looking up regional firms and calling them and say, hey, I have a really unique situation. Do you have somebody who handles whatever it is? And you can probably find somebody that way. Hopefully that answered. If not, if I don't answer a question and you're still kind of like, oh, I'm not too sure, just put it back in there and ask it again and I'll keep trying. So you changed your career last year, and that's my issue, the basics of e-commerce tax issue. Any CPA could pretty much help you with that. It probably does not need to be a specialized CPA for that. So, and I'm speaking from my own experience. So I have worked as a tax preparer and as an auditor, and I have audited everywhere from jails, like an actual prison, to museums, to hospitals, to retail stores, because the concept and the business things are basically the same. Where in my Friday morning shows, I talk a lot about business because the foundations of business and business principles are the same. And so with the foundations of accounting and accounting principles. So you don't really have to find somebody who specializes in this. I know there are other sellers on here giving advice saying, oh, you need somebody who knows all about e-commerce or all about live selling. You really don't. There are no special tax deductions for what we do here on Whatnot. Somebody doesn't need to know about this to find that loophole or that special thing. It doesn't exist. So if you turn in mileage for sourcing and post office trip, does that cause an IRS? Absolutely not, Tabitha. It does not. So when you're talking about mileage, you can pick your standard deduction, which is 70 cents for last year, or actual. You've got to pick one or the other. And as long as you're honest, you never have to worry about it causing a red flag for an audit. Now, when it starts to become extreme, that's when the red flags go up. So one of the questions they're going to ask you for your vehicle is, do you have another vehicle available for personal use? They're also going to ask you, how many commuting miles or personal miles did you drive and how many business miles did you drive? Think about it from their point of view. If you say, nope, I don't have another vehicle, this is my only vehicle, and 100% is business use. Well, that sounds odd. The IRS may be a red flag, because then they're going to be thinking you don't have another vehicle and you use this only for business. Well, how do you go to the grocery store? How do you do your normal stuff? So as long as you're honest and reasonable, you're going to be fine. Do you do private consults? I do not do private consults, only because I do work for a global accounting firm, and my contract prohibits me from charging for services. So this is as much as I can do. I do answer individual questions though. So if you want to DM me, I do try to give guidance through DM, but I can't do consults. I'm just prohibited. So as long as I have that gig, my hands are tied here a little bit. So you can have that gig. It's my job. As long as that's paying my bills. All right, I'll keep watching for questions. Okay, I'm wondering if I have to do item for item inventory or just dollar amount in versus dollar amount out. I see random polls by hundreds. You can do it by average. You don't have to do item by item. Now, if you're niche and you're small, and you're doing 20 to 30 items per show because it's very high end, very niche, it's easy to do item by item. But when you, like you say, get to the hundreds of items per show, it becomes administratively impossible to do that. Or you could, but you're going to spend so much freaking time that you're not making any money. Hi, Brittany. Um, so you could do it by averages. And the way I explain it is, if you got a box of, oops, sorry, I hit the microphone. If you get a box of stuff, full box of miscellaneous, whatever you sell, let's just say jewelry, because you could fit a lot of jewelry in a box. There may be hundreds of pieces. You can just log the cost of that box. So you paid $100 for this box of jewelry. That's $100 into your inventory. Then when you're looking at your ending inventory, you can go and look at that box and say, okay, I sold about half of it. You're estimating, and that's okay. I've sold about half, so that means $50 is cost of goods sold. 50 is still sitting in my inventory. So it's okay. The key is to find a method and be consistent in the application of that method for the whole year. That's the key to it, so that you're not doing it one way for this and one way for that, and you're all over the place. Because if you were to be audited in that case, the IRS is going to be like, what the heck are you doing? What is your favorite program for organizing expenses and receipts? I do not have a favorite program. So what I always say is it depends on you and your behaviors and your skill set. Personally, I use Excel. I've had experience with QuickBooks. I actually used QuickBooks all of last year. I've used it for years and years for other things. But for my business, I used QuickBooks last year, and it was overkill. I didn't need all the features it had. So I felt I was paying for something and I wasn't utilizing it. So it was more than what I needed. Excel gives me what I need. I'm familiar with Excel. But if you're techie and you like all the reports and the buttons and stuff, QuickBooks is good. Reseller Genie, those are probably the top two. I know there's others, but those are the two like most popular ones. But if you're like, hey, I really don't need all the gizmos and gadgets, I just need a way to track, you can use Excel, Google Sheets, pen and paper. The most important thing, Nebraska Nan, is picking a system that you will use consistently. Because if you're trying to use a system and you're like just dreading opening up that computer, but taking out your notebook is like kind of cool, like you can sit with your coffee and do your notebook may be the way to go, right? Do something that's going to work for you in the way that you operate. That's going to be the best system that there is out there. Is there a mock spreadsheet we can use as a guide? I sell in my PDFs, I do have an income and expense tracker, along with an inventory tracker in my PDFs. I sell at a vintage booth locally and eBay. Cool. So for Whatnot, I can do average instead of dollar for dollar, or does my whole system have to match for record keeping? So because it's all the same, and I'm assuming you're Schedule C sole proprietor here, and your vintage booth, your eBay, and your Whatnot is all a similar business, so you would only file one Schedule C. You would need to do the same type of inventory across all. So whatever you're doing for all of that, I would do also. However, if for your booth and eBay, because eBay is a little bit different. eBay, you're usually buying one item. It's easy to track, right? It's not this volume sales of 100 items per show. You can do specific identification for the booth and for eBay, and then just for Whatnot, keep a separate inventory that's averages. So as long as you're consistent in that, where just Whatnot, you're doing it by average, but the other two, you're doing specific identification, that's acceptable. When I say don't mix it up, I mean like don't start with specific identification for eBay and booth, averages for Whatnot, and then all of a sudden for 2 months out of the year for Whatnot, you're going to do specific identification. And then you go back to something else. And then over here for eBay, you do it one way, then do it another way. Pick what works for each business line and stick with that. For example, for a while I was selling jewelry, higher end sterling silver jewelry. I did specific identification for my jewelry. It was a new business line for me, a new product line, and I needed to really, really focus in on my cost of goods sold per item, like to the penny. So I was keeping it piece by piece. Whereas in my vintage, I was keeping it more by averages. So that's still okay because I was consistent within those product lines. Hopefully that makes sense. Thanks for sharing the show. Yeah, I appreciate that. Getting complete receipts as a buyer from Whatnot is impossible. On the seller end, do I have to reconcile individually? Hold on, I'm trying to, getting complete receipts as a buyer from Whatnot is impossible. Yeah, they don't make it easy as a buyer. You have to like individually go into all your orders and like write down or take screenshots of what you need. Or I think they send you an email too. In the seller end, do I have to reconcile individually? You don't, but you're going to want to make sure you're capturing. So I'm guessing that you're asking that you buy inventory from Whatnot. So you're a buyer and you're also a seller and you buy stuff from Whatnot to resell. The only thing, just make sure it doesn't have to be individual, but make sure you're capturing the full cost, because any shipping coming to you is included. Shipping and taxes would be included in that price of that item you're buying for inventory purposes. Thank you, Crystals. I don't think it is, but thank you. So you've bought from Whatnot to sell at your booth. So record keeping has been awful. It's harder. Yeah. Buying on Whatnot, it probably isn't the best. They've made progress on the selling side in the reporting over the last like year. They've really made progress. But yeah, as a buyer, I would suggest every time you buy, you get that email of creating like a little folder on your email and keeping all of those.
If you go to, as a buyer, if you go to your activity, you can download the order history.
Oh, I didn't know that.
So
I'm learning.
But you have to do this on a computer. You can do that directly on Whatnot.
Yeah, and Pretty Peach, I agree. Those are just packing lists. They're not good for record keeping. They're more, I look at the packing list, as a confirmation of completeness of the order. I don't look at it as an accounting tool. It's more just to show my buyer that it says 4 items on your packing list. Here's 4 items in your box. Oh, cool. So you print the emails. Perfect. Yes, as long as you have those. They don't set it up as great as it can be.
And the option is to download it as a CSV, which is a comma separated value. You can import it in Excel.
Yeah, if it's a random listing, it's more about just knowing how many number of items that you bought and that many are in there. So there you go. There's the answer. I learned something new today too. I don't buy a ton to resell on here. A handful of stuff, but I'll just record it as I do it on a weekly basis. So I don't really have to go back and look at it. All right, so I started to ask at the beginning, if you have already filed your taxes, throw a heart in the chat. If you haven't, put a sad face in the chat. Let's see where we're at here. $50-50 so far. Oh, here we go. Kind of 50-50. All right, so we have some people who have 5 days left. 5 days, y'all. We are April 10th today. Filing right now. Awesome. You can do a poll. We could do a poll. Do you want to put a poll up there? The only reason I don't, oh, you just did. Look at that. He's on it. Look how good my husband is. Let me purchase. Which packet is for spreadsheets? 03. Let me take a look and I will tell you. So if you just want the spreadsheets, so the library, if you buy the full library, you get access to everything that's in there. 29 different PDFs and spreadsheets, combination of that. But there are 29 in total in the library. Or plus whatever I add to it this year, you'll get access to whatever comes up too. That's the library. Or individually, I'm trying to find the listing. Hold on, give me a second. I'm searching through my listings. Individually, I can tell you what they are now. Oh, I can't see it. Geez. I'll have my husband pull it up. He'll put the numbers in there for the spreadsheets. When I'm looking at it from the selling side, I can't see because it has all the variables where you can pick. I haven't worked in years due to disability. I'm sorry to hear that. So I have to figure all this out again. Oh, mamas, yes. Yes. But you know what? It's no different. You get income, you have expenses, you pay taxes. It's the same no matter where you are, right? So disability throws a little bit of a loop in there because you have some income limits depending on what you're making on disability so that you're not jeopardizing that source of income. But I have them done, but always wait a day or two in case I remember. That is such good advice, Crystal. Such good advice. To do your taxes and then sleep on it. Sit for a day or two. I love it. Does an extension count? Well, we're going to talk about extensions. So until I see other questions, I was going to talk about extensions. That's why I was asking, kind of see what the crowd was, if there's still people that haven't filed. So for those of you who put the sad face in, not the books, you want the library. I'll pin it really quick, but there's a ton of words. It's this listing right here. So live seller PDF and Excel files, 29. You get everything in there plus anything I add to it. So you get a link to a Dropbox that has everything forever. I don't want to say forever, but as long as we're all sellers on here. I have no plans of going anywhere. I'm going to take that down though. So that's the one. Or there's another listing. You can just buy them individually. I have a W-2 job. Oh, my husband's about to say something.
So the spreadsheet says there are 3 so far. It's going to be the income tracker. So if you see on the list, it says income and expense tracker, the inventory tracker, the mileage tracker. There were 4, and the price worksheet. So there's 4 spreadsheets.
The rest are PDFs.
And the rest are PDFs.
Yes.
So again, income and expense tracker, inventory tracker, mileage tracker, and price worksheet. Those are the 4 Excel spreadsheets.
And Busy Bee. So you have a W-2 job, you sell on multiple platforms using a DBA. Okay, yes, you're a sole proprietor, you file a Schedule C. And if you're selling on multiple platforms, you're reselling, that would all go on one Schedule C. So the only time we use multiple Schedule Cs is if spouse, A is doing a different type of business and spouse B is doing a different type of business. That's 2 Schedule Cs. Or if you are doing 2 different types of business. I'm a reseller and I'm an Uber driver. That's 2 separate types of business. So it's 2 different Schedule Cs. But eBay, Poshmark, Mercari, if you're reselling in general, that's just 1 because it's all the same type of business. I have a farm and my livestock guardian dogs. Oh, that sounds cool. I'm sorry, got hurt. And you spent about $4,000. Can I use that as an expense? So farming is a whole different set of rules. Amber, if you want to copy and paste that into a DM for me, I will go and look that up for you. Farming is not something that I have dealt with a whole lot, and that's a very specific one that I don't want to answer incorrectly off the top of my head. So message me, and I will look up the rules on that, and I will answer you back. I am trying to do TurboTax myself for the first time. It's hard. You think so, JTL? I think I have full faith that the majority of resellers can do their own taxes. I would suggest if it's your very first year, at least do a consult at a bare minimum, because there are certain things that are a little tricky. For your first year, do you want to pick cash or accrual on your inventory? Do you want to do standard or actual on mileage on your home office? So there's some decisions you need to make in the first year that affect you moving forward. But I think for the most part, people can do it. Click on the information. And here, if you also have any questions doing your TurboTax, you can always go to www.irs.gov. In their search bar, search Schedule C instructions. They have a whole booklet that walks you line by line by line through the Schedule C, which then if you're doing your TurboTax and you're like, I'm not sure what they mean by supplies. I know I'm picking an easy example, but I don't know what they mean by supplies. Does that mean shipping? Does that mean this? You can look in the Schedule C and gives you even more information than what TurboTax does. So that could be a way you can save yourself money, still do it yourself, but get more information. Is it necessary to take account of monthly inventory at the end of every month with itemized deductions? So Nebraska Nan, the inventory is the $1 million question. We're talking about 2 different things here. Oh, hold on. Before I get into that, my husband's saying, answer the next question. Oh yeah, TurboTax totally sufficient for resellers. But you guys, you can do this for free. Go do Free Tax USA and you don't have to pay for TurboTax. The only time Free Tax USA charges you is for a state return. So you can save yourself money and it's just as good. I use it as a CPA, Free Tax USA. I thought he was going to say something. Okay, let's go to this inventory question. So we're talking 2 things with inventory. We're talking one, accounting. Month to month, you're doing your bookkeeping, you're keeping your records as a business, you're operating as a business, you're keeping all your accounting records, you're using those records to make future decisions. That's your accounting. Then you have taxes that come at the end of the year. For your accounting, you should be doing inventory. You're keeping your inventory. Inventory is an asset. So when you buy something, it's not an expense, it's an asset. Then when you sell it, it becomes an expense. You're very welcome. So you should be tracking this. I don't necessarily say that you have to take an inventory each month, but it depends what type of inventory system you've set up. If you can know through the record keeping you're doing what came in and what went out, then I would say you only need to do inventory a minimum of once a year at the end of the year. If you can't answer what came in or what went out, doing a regular inventory is good to know, because the only way you're keeping proper accounting records and tracking your cost of goods sold is by knowing what went out, knowing what you sold. And I did a whole 2 hours this morning on the importance of cost of goods sold. If you don't know what you sold, if you don't know the price you paid for something, which is what we're talking about, right? The price you pay for your inventory ultimately is, then you sell it, that's your expense. That's your cost of goods. If you don't know that, how are you pricing appropriately? If you don't know that, how are you selling that item at a price that's going to make you a net profit? It is on YouTube and it's the same name, Zoe's Treasures. So knowing your cost of goods, I don't care what kind of system you guys keep, but keeping a system is vital. Think about it like this. I use this example. I sell vintage, so I'm going to use a vintage vase. I sell a vintage vase for $20. Yay, wonderful, awesome, I'm excited. I just made 20 bucks. Wait a minute, I have my cost of goods sold. If I spent $17 on that vase, oh, that $20 doesn't look too good anymore, because now I only have a $3 gross profit, right? And this is before whatnot fees and any other expenses. I have a $3 gross profit. But if I only spent $6 on that vase, now I have a $14 gross profit. That's a huge difference. I need to know that in order to know if I made money at the end of the day, and if there's enough money to absorb all the rest of my expenses. In addition, the other point that people don't think about, the more control you have over your inventory on the front end, the less work you're going to have on the back end, and the more options you have. Losses aren't aren't necessary. I think you're saying aren't necessarily a bad thing in business. They're not. And we could talk about losses. I think our losses aren't always a bad thing in business. They're not. And we'll talk about it. But on average, when you're selling, you don't want losses on your items. Okay. And I'm going to go back and kind of do my equation thing, and I'll tell you why. So you need to know, I want to make this point really quick about having options. If you don't know what you paid for something, when you go to sell it, you've taken away all your options as a seller. So you're like, well, what are options? Can you do reduced shipping? Can you do a discount? Can you do a flash sale? Can you offer a coupon? Can you mark the item down if you want to mark that down during your show? If you don't know how much you paid for the item, all those options go out the window. You can do it, but you're probably losing money. Can you do it and still make money is the question. You don't know if you can do any of those things. I made a point this morning. I see Pretty Peach. Thank you. I'm going to get to your question. I made a point this morning that if you go on Whatnot and you watch a lot of sellers, and I can almost pinpoint sellers who don't know their cost of goods are sellers who are too afraid to do low starts, who don't offer reduced shipping, don't offer coupons, and rarely do flash sales. Why don't they do that? Because they don't understand their cost of goods, so they think all of those things are making them lose money. Well, if you understand your cost of goods, you understand your profit margin, your gross margin, then you know if you can do those things to attract buyers. You're hurting yourself as a seller by not understanding your cost of goods. That's my soapbox. I went into a lot more detail this morning. So let's see. Let me make sure I didn't miss questions. So yes, keep it monthly. If do a monthly one, if you can't at any point in time know exactly what you have through the system that you use. So we're going to get back to losses. I thought you can only show it for a few years before they recognize you. Maybe they told me wrong. Or before they... recategorize you. No, the IRS won't recategorize you. The IRS may audit you, they may question you, and you're probably talking about the 3 out of 5 year rule. This is a rule that people throw around without understanding the rest of it. The hobby versus business, yes, and I do have a PDF about that. But the 3 to 5 year rule is like taking, and I don't talk politics or religion, but I'm making an example. It's like taking one sentence out of the Bible and then trying to explain the whole Bible because you understand one sentence. That 3 to 5 year rule is like somebody pulling out the 3 to 5 year rule and trying to explain all hobby versus business off of one rule. So it's not complete. The hobby versus business rule is there's actually 9. Yes, my love, you look like you need to tell me something over there. Oh, the poll is most people haven't filed their taxes. Okay, we're going to get back to that. So hobby versus business, there's actually 9 different factors that the IRS looks at. And it really comes down to intent. That's what it comes down to. Now, if you continue to make losses without any upward trend, like you're trending to make money, they may question you. Doesn't necessarily mean they're gonna say, no, we're gonna disallow these expenses, because it is an area that's highly abused when it comes to writing things off. People say they're a business when they're really a hobby. However, that 3 to 5 year rule really isn't a thing. Now they do mention 3 to 5, but it's in the context of a group of 9 variables that the IRS looks at. And again, if you take those variables as a whole, it boils down to intent. Are you doing things and operating in a way to make money? Are you buying inventory? Are you scheduling shows? Are you changing things in your shows to strategically plan a way to increase your revenue? So just because you have a loss doesn't mean that it's an IRS red flag or that you're going to get recategorized. Will you be adding the affirmation cards to the Buy It Now tonight? Also, we can write them off. You can write them off as an expense. Are they not in there? Do I not have our decks of cards in there? Can you see if you can put them in? We'll see if my husband can throw them in there. I thought I had them in there. I guess I don't. We'll see if we can put them in there. But possibly audited of showing loss too many years. You run the risk. If you go and extended a period of time of just making losses, yes, you could raise the likelihood of being audited. However, again, when they audit you, they're going to send you a letter probably. They're going to say, hey, Bob, it looks like you keep making losses. Are you sure this is a hobby? Of course, they're going to use a bunch of legal language, but that's basically what they're going to ask you. And you say, no, Mr. IRS man, this is actually a business. Let me show you why this is a business. I did this much money in year 1. I had excessive expenses in year 1 and 2 as I set up my studio and I got my business going. In year 3, I took a loss, but my loss was 20% less than the year before. I am trending by year 5 to make a profit, or by year 7 to make a profit. So yes, maybe you might get a letter if it's losses year after year, but if your books are in order, you've done everything you're supposed to do, you're keeping your records so that you can show I'm trending, this is what I am doing as a business to make money, they're going to be like, okay, cool, you're a legit business. See you later. Would there be a... Oh, you got it. Okay, my husband put it in there. Let's see if I can pin it. Can you pin it for me, honey? Thank you. Would they be education? You can use them as education. You can use them as marketing expense. Depends what you're going to do with them. But yeah, you can use them as education expense. There is so much misinformation out there on Nebraska Nan. And, like anything that we do, we have to be good stewards in making sure that we are validating the information. Almost everything I tell you, I'm going to try to tell you where to go on the IRS website. And if at a bare minimum, you could pretty much just go to the IRS website and Google like the keywords that I'm talking about. Thank you for your purchase. Speaking of, I'm going to do some giveaways too. The giveaways are for one CEO affirmation card and a vintage postcard. So we're going to run that one. So the poll, most people haven't filed. Can you take the poll down because it covers up my chat and I can't see my chat anymore? Pitter pause. So you are talking, it's a great question. You are talking about estimated taxes. Oh yeah, storage units are pricey. Well, it depends where you are in the country. Pennsylvania, surprisingly, they have really cheap storage units. Okay, filing quarterly. This depends on your income. Again, you got to keep your records to know. So what you're referring to is estimated taxes. Basically, estimated taxes are the IRS is a pay-as-you-go system. That means as you earn money, they want their share. So you pay them as you go, pay-as-you-go system. When you're working for somebody else, and this is the easiest way for me to try to explain it, when you're working for somebody else and you're a W-2 employee, every time you get a paycheck, they withhold the taxes and send it to the IRS. So they're paying it as you go for you. I mean, it's pulled out of your check, but they're remitting it for you. So we don't really worry about it when we work for somebody else. But when we work for ourselves, we don't have anybody paying that for us. Well, the IRS says that you need to pay in either 100% of what you paid in, or 100% of what you paid in last year. Is that what it is? 100%. I'm going to go back to the easier calculation. If your estimated taxes if your tax liability is this year is going to be $1,000 greater than what it was last year, then you need to be paying it on a regular basis. So let me break that down. If you go and look at your tax return from last year, thank you, there is a line that says tax liability. Let's just say that tax liability is $5,000. Not what you paid or not what you got a refund, the tax liability line. So last year is $5,000. If this year you expect that tax liability to be $5,100, then you need to be paying in estimated taxes. The only way for you to know that is to know your income, your cost of goods, and your expenses, get your net profit, and estimate your tax rate based on that net profit to know if you're going to owe more taxes or not. Then if the answer is yes, you should be paying in estimated taxes. Does it keep you from a huge tax bill at the end of the year if you file quarterly? Yes, it will. So that's the idea of it, is that you're paying in what you owe as you go. The downside of that, so if you don't pay in what you owe, one, the IRS is going to say, you didn't pay me timely. We're going to charge you a penalty because you didn't pay me as you went along throughout the year, as you earned this money. And that's on us to figure out if we owe it or not. Okay. And the IRS isn't just going to be over here on April 15th waiting for their money. So they're going to say, I'm going to penalize you because you didn't pay me. And not only am I going to penalize you, I may charge you interest on that because that was my money and I lost interest on it. So yes, it does cost you if you don't do it. For a reseller license, quarterly reporting too, right? Pretty Peach, I think when you're talking reseller license, you're referring to a sales tax exempt or a sales tax license. That depends on the state. So those are state issued, not federal issued. Some states will require you to report on a quarterly basis for your sales tax. Other states won't. So that's very state specific. And usually if you go to your state website, wherever you go to apply for that reseller certificate, they will have your like the rules of what you need to do, of when you need to file. California, I don't know off the top of my head, but California has a ton of state rules. I would lean towards being like, oh, I need to read extra into that. California, Massachusetts, some of those states are very, very heavy on filings. What's the deadline for the first quarter for estimated taxes? So your dates are January, February, March, April 15th, January, March, April, May, June, July 15th. I got to count it out. It's the month after the end of each quarter. So October 15th and January 15th are your estimated tax dates. And again, that's one that, again, you can go to irs.gov, type in estimated tax, all that information will pop up for you also. I do have a PDF that really dives into estimated taxes and gives you examples if you're a W-2 and whatnot, if you're just whatnot, and really explains it and helps you figure out what you need to do. On the PA, okay, so you're still confused on the PA reseller state tax exempt license stuff. So Monster Mama, so I have a tax exempt, and in PA, you're not required to file quarterly. They have two different types in PA. So you have your wholesale exemption and a resale. You want the wholesale exemption. That one you don't have to file quarterly on. And Marty Mar, you got that giveaway. Thanks for being here tonight. First year for me with no W-2. Well, congratulations on taking the leap. I hope it was a planned thing that you wanted to do. Do you have to register as a business after a certain amount of sales? No, you're a sole proprietor. The minute you hit go live and you sell something, guess what? You're in business, you're a sole proprietor. Unless there is a local or a state law which I'm not aware, local laws, or maybe a few out there. I don't know all the locality laws, but I'm not aware of state laws that you have to register as a business. You can be a sole proprietor the whole time you're a reseller. You do not have to register as a business. This is another misconception out there, that you need to go get an LLC. You don't have to go get an LLC. There's reasons why you need to, and there's reasons why it might not be right for you. It really depends on the facts, all your unique facts and circumstances. You do not, a Monster Mama. Nope. I'm a sole proprietor. So Monster Mama and I are both in Pennsylvania. So that's why we're kind of talking a little bit here. So Monster Mama, I file as a sole proprietor. I do not have an EIN, and I have a wholesale license for Pennsylvania. But I do have to say, Monster Mama, I've got a wholesale license in Florida years ago. I've also am familiar with the rules in Georgia. Pennsylvania was far more confusing than Florida and Georgia were. So I get where when you go to the website and you're kind of like, what's going on? It took me some serious, like an hour or two, to sit there and read through it and make sure I really understood it. Pennsylvania is not the most clear in their explanations. I'm guessing that city license is required if running an online business, even though not selling in my actual town due to home, or that depends again on your city. So that, and there's no way. Now that is when I would say maybe getting a local CPA might be a good thing, because they're familiar with those rules. Most CPAs could file any state tax return for you, and obviously federal tax returns. I could, as a CPA, if I were able to do tax for everybody else, if I didn't have a contract that limited me, I can do any federal in any state. Most of the state tax returns follow a federal rules for the most part, and then each state has a few nuances, but they're pretty easy to figure out. So if you have a CPA and you're in California and you get a CPA in Nevada, that's probably still okay. Very confused on what box to even check. Monster Mama, let me make a note. Let me see if I can like do some screenshots and show you. I'm going to put down here just to reach out to you. Especially since we're in the same state and I've done it. That would be easy for me to do. If I sell my own jeans, no receipt for $20, what can I claim as cost of goods? Very good question. So no receipt. If you don't have a receipt, you're selling clothes out of your own closet. And if you don't know for sure, hey, I paid X number of dollars, do your best to estimate it. If you can't estimate, and I would go very conservative, like, if you bought your jeans at Walmart, they're probably going to cost quite a bit difference than if you bought them at Macy's, right? So, think about where you got it, come up with the best guess. To be the most conservative, the absolute safest, use thrift store value. So if your local thrift store charges $2.99 for jeans, I would put my cost of goods at $2.99. You can't go wrong with that. When I'm sourcing, they will ask if I have a tax exempt number. Sometimes they'll ask you, and if they don't, you need to tell them yes. And keep a copy of the certificate on you. Keep a copy on your phone and keep a copy with you. Every place is different in what they are going to want as documentation. Some will just ask you what the number is. Some will have you fill out a form. Some will want a photocopy of that certificate. So I found, I kind of break my own rule, but I really source in a lot of the same places. I don't keep a copy with me, but I do have it on my phone that I can show them and text it or email it when they ask. Even without a receipt on proof, estimation is okay. If you're being conservative and honest with it, yes. So you need to document how you came up with those prices. So you need to go through and say, okay, I bought these jeans approximately in 2001. I got them from Nordstrom's. Here's other jeans around that time. Like, you really need to make sure you cover all your bases. So if you're going back and recreating something, the IRS does not really like recreation. So you need to go 2 steps further in your documentation if you're recreating. And I would not make it a habit moving forward. It would be like, hey, look, I cleaned out my closet. I have these 40 pieces of clothing. Here's how I documented it. Here's the research I did, just to protect yourself, just in case. Pretty Peach, you got that giveaway. Congratulations. Thanks for being here.
Congratulations.
But on a normal basis, you can just get a receipt, like moving forward. I know we're talking about stuff you didn't have a receipt for from before. So even without, okay, we talked about that. Let's see, what else am I missing? Oh, how do you get a tax exempt? Is that what you're saying? How do you get one? I think that's what you're asking. How do you get a tax exempt? Go to your state website and type in reseller certificate and search for that. And then you should find it on your state website. So reseller certificates are all state-based, not federal. So curious if we can use a tax exempt on whatnot when sourcing. Yes, absolutely, Pretty Peach. Now you've got to upload it. You've got to fill out a form. Like they have like a little questionnaire. You fill out a few things. Then you have to upload your certificate. And then whatnot makes you re-upload it on an annual basis. And they won't remind you. It just expires and all of a sudden you see that you're being charged tax again. So then you have to go back in and re-upload it. But yes, you can. So is it easier to put zero cost of goods for pros? You can. That's the safest way. All of that's going to be a gain to you. If you're talking like 10, 20 items, it's probably not a big deal because how much are you really making off this? If you're selling stuff that's from 5 years ago, what, $5 to $10 per item of clothing? Is it really a lot? So kind of weigh the pros and cons of that. Now, if you're talking about high end, you're selling fur coats, and then you'd better do some research. Maybe get an appraisal, see what it may have been back then. You got to really go the extra mile. This may be no dumb questions, but my state required a local business license if your gross receipts exceeded $3,000 a year. Is that 3K sales or profits? Sales. Gross receipts are sales. So top before you take any expenses. What state? I'm just curious what state that is. Missed out on saving all that tax. I paid a month of taxes because I forgot I had to update my tax ID. There you go. Southern Charm says it. And I think Southern Charm, you're the one who brought it to my attention that it just all of a sudden disappears. I think it's because you had said something that I realized that's what happens. Tennessee. Wait a minute. Bumming with Nana. Wait a minute. Your state requires a local a business license, not business tax. I'm like, Tennessee is a tax-free state. Oh, and I know that only because it's on my state of one of the ones that I want to retire to. I'm only going to retire to a tax-free state. So those of you who have not filed yet, you have two choices today. Well, two choices within the next 5 days. You could scramble and get it done, or you can file an extension. So how do you know which one is best for you? That was kind of my notes for tonight, but keep asking questions. I will answer any questions that come in, but until I see them, I'm going to keep talking a bit. So if you haven't done your taxes and you got to figure out, do I push through and try to get them done, or do I file an extension? Here's how I would approach that. If you're going to file, I would say file your taxes if your income is substantially complete. You know most of what your income is. You feel pretty good. May not be perfect, but look we're 5 days into, we're 5 days away. Perfection's out the window at this point. You're looking for as best as you can do right now. So your income is substantially complete. You're not missing thousands of dollars of income. Your expenses are reasonably accurate. That means you captured the big stuff. With 5 days away, don't go chasing down that $6 receipt for some boxes you bought at Walmart. You lost it. Too bad. Look at the big stuff. Your mileage, your home office, major shipping supplies, shipping charges that you paid on whatnot. Go for the big stuff. You just default, well, congratulations. So if your expenses are reasonably accurate and you're confident that you're not missing major, big things. If you're like, I'm pretty confident, my taxes are pretty summed up. I'm just like, it's not as good as it could be. I probably could have done better. I probably have some money left on the table that I'm not claiming. Go ahead and get your taxes filed. Push through, get them done. However, if you got a bunch of stuff incomplete, you're like, look, I sold on eBay along with whatnot, and I have no idea what my eBay income is. I haven't got a 1099. I'm not really sure what's going on. So that would be like, I wouldn't file quite yet. If you're still reconciling bank statements, if you didn't keep any records all year long and you're sitting here 5 days from tax day, it may be time to file an extension. Let's see who's going to get that giveaway. Southern Charm, you got that giveaway. Congratulations.
Congratulations.
And if you know you're missing large stuff, file the extension, buy yourself 6 months of time. But what I want you to do, if you are one of those people, and Southern Charm, I will try to send you a postcard that I have not sent you already. Oh, I got a fuzzy. Okay. If you are one of the people that file an extension, please do this. After this show, please take 5 minutes to do this. Go look at your calendar. You have until October 15th if you file an extension. Do not wait until October 10th. Okay? Don't wait till October 10th. Why are you postponing the pain? Go to your calendar, pick the day, block off some time that you're going to focus and get this done so that you don't wake up 5 days before October 15th, 6 months from today, in the same boat that you are today. Filing an extension is not a bad thing. It's not an IRS red flag. It's not a sign for an audit. It's okay to file an extension. But if you're filing an extension, there's usually a reason. Most often it's because you contacted a CPA too late and they couldn't fit you in. You waited until like 2 weeks ago to try to find a CPA and they're booked. That's a good reason. You didn't do any of your accounting and you really don't want to face it. It's a big mess and it's going to take hours and hours and you're a busy reseller. So that kind of sucks. You got to do all your accounting again. Okay. That's probably one reason why you may file an extension. But what do we do to fix that? Recognize the problem and don't let it happen next year, right? Or there are certain types of investments when you're waiting on K1s and certain investments that don't come until later in the year, or they're still working them out. That's a good reason to file an extension because you're missing big chunks of legitimate information through no fault of your own. So if you have to file an extension, it's okay. Let's bring it up. I want to show you how easy it is, but some vital information that you have to have in order to file an extension. Hold on, before we bring that up, let me answer these questions, and then we're going to look at the extension form. If you moved states throughout 2024 and 25 and bought inventory throughout, how do you even start to approach that? Okay, so it's actually really easy. Your inventory is your inventory for your business. IRS doesn't care where you bought it. You should still know as a reseller what you started with, what you bought, and what went out, and what your ending is. So you approach it the exact same way as if you hadn't moved. Moving states has no bearing on your inventory whatsoever. Now, you had to move your inventory, that sucks, but it doesn't change the way you account for your inventory. If we treat this as a hobby versus a business, are hobby-related expenses deductible? Regardless if you make a profit, break even, or lose money. No, they are not deductible. You can't deduct hobby expenses. And it's not if you decide to treat it as a hobby. This is another piece of advice that floats around. Maybe it's not advice, it's just the way people talk about it. And I may be more particular because of the difference when it comes to the IRS with hobby versus business. But I hear other sellers say, well, if you're just doing this as a hobby, it's not really your decision. It's the IRS factors that decide. It's not like, oh, I'm just going to do this as a hobby for a couple of months and see how it goes. No, if you're doing it, you're making money, you have an intent to do this, you're making sales. You may not need to make a profit, but you're making sales and you're scheduling shows and you're doing this as a business, that's a business. You don't get to choose to be a hobby. So if you decide this is going to be a hobby, you're not selling your stuff on Whatnot. You're not running live shows. Hobbies don't run live shows to make money. So if you're on here doing show after show, you're a business. It's intent versus behavior. So intent and behavior kind of rolls into the same thing. So yeah, it's what you're doing. It's that intent to make money. You could be taking a loss and still be a business because you're operating as a business. You're buying inventory. You're strategically planning. You're figuring out, how do I get more people in my show? How do I keep people in the show? How do I be engaging? How do I raise my sales prices? That's not hobby activity. That's business activity. I'm still holding stuff from Hello, the polish picker. I'm still holding stuff from 2024, but sold some throughout. How am I supposed to do the inventory? So, Nacho, First of all, what I would ask you is, how did you file your taxes in 2024? You need to go back and look in 2024. When you filed that, did you, on your tax return, account your inventory as cash or accrual? That's going to make a difference on how you do it now. So if you did cash, you have to do cash now. I would not recommend it. Certain circumstances, it's okay, but it's not the best approach. But if you did accrual, then you just continue with accrual. It doesn't change. So let's think about inventory really quick. I'm just going to do the basis of inventory. You have money in your bank. You take money out of your bank, you buy inventory. Both of those are assets. There's no expense happening. There's no tax return activity going on because you bought inventory. The tax return activity happens when you sell the inventory. That inventory now becomes cost of goods sold. That's an expense. That goes on your tax return to deduct from your revenue that you make. Now, your tax return allows you two ways, cash or accrual. What I just explained is accrual. It's an expense when it's sold. Your tax return will allow you to say, I bought all this inventory in 2025 and I'm going to expense all of it. I'm just going to take it all as an expense. It's allowable. It's not recommended across the board as a way to operate. Why? You buy a bunch of inventory in 2025. You probably didn't sell it all, but you're say you spent $10,000 of inventory in 2025. You're going to take, you said, oh, I need the write-off. I'm going to take all $10,000. I'm going to do the cash method. So you write off all that inventory. Then you have this whole chunk of inventory going into 2026. So now you're selling this inventory and you have no expense to offset that, causing yourself a larger tax bill in 2026. So whether you pick cash or accrual is considered cash. That's your tax planning. That's tax strategy. There are people that do nothing but specialize in tax strategy. This is one of those methods that fall under tax strategy. When you are the first year you're in business and you pick cash or accrual, you should be thinking about, what am I doing next year? Is this something I'm going to continue operating? If your plan is to go out of business next year, to not only do this for 6 months, you're just cleaning out grandma's attic, I'm going to do this for 6 months, and then I'm not doing this again, cash makes perfect sense. So it's not a decision to be taken lightly. I don't sell, let's go back here. I don't sell inventory. Oh, wait, hold on. I got to go back up. I'm missing questions. I want to make sure that I'm not missing any. I plan to travel to the West Coast to source items. Ooh, that sounds like fun. So besides mileage, room and board, and meals are not 100%. Is there anything else I have to record for expense? No, make sure that the trip is purely for business. It doesn't mean that you can't take a day and go lay on the beach and get a suntan, okay? It doesn't mean you can't have any enjoyable activities or personal activities, but the trip has to be the primary reason for that trip needs to be business in order to make it deductible, okay? So make sure that's first. So you said mileage, so I'm assuming you're driving there, so you could take your mileage for it, which is fine. You could take your hotels. Meals are at 50%. Or you can also take an option to use a IRS approved per diem rate, a daily rate, so you don't have to keep all those receipts. You just take what the IRS gives you. And your meals have to be reasonable. You can't be eating escargot every night and going to Ruth's Chris every night just because you think the business is paying for it. That won't be allowed. And other than that, no, there's nothing else. I would document somewhere just in your own records what the business purpose was. And make sure that it's very clear. For instance, my husband and I are traveling to Austin for the Seller Whatnot Seller Summit. We're flying in on Friday. We attend the summit all day Saturday. We fly home on Sunday. Fully business deductible. On the other hand, I just went down to Nashville with my daughter for a cheer competition. While I was in Nashville, I went to about 5 different antique stores and I did a lot of sourcing. My primary purpose for going to Nashville was for a personal reason, not a business. So I can't deduct my airline, my hotel. Could I deduct the mileage going to driving over to the antique store? Yeah, I could. I had a rental car. I'm not going to deal with that. To me, that's not worth my time. So you have to look at what is the business purpose and just make a little note and keep it with your tax records so that it's easy to defend if you ever have to defend it. I missed what you said about the tax ID number. Do I need one to start selling? Nope, not at all, Trish. Do not need a tax ID number. The only time you really need a tax ID number, which is an EIN number. Oh, did I cut out Nacho? I hope. Sorry about that. Hold on. Let me go back. My husband's telling me I'm missing questions, and then he keeps telling me to go back up. So let me follow his instruction. I didn't sell my inventory in each show is what I mean. I have much higher dollar items too. I didn't file into, oh no, you didn't file in 20. Okay, so if you didn't file in 2024, I would say just go with the accrual method. Go back and file your 2024 tax return, and then file your 2025 with the accrual method. Were you in business in 2024 is what I would ask. Because if you were, you need that Schedule C on your 2024 return. I missed what you said about tax ID. Okay, so no EIN is not required. The only time I recommend an EIN, if you're going to pay employees, you need an EIN. Sometimes if you're opening up a specific bank account in a business name, like if you have a DBA and you want to open a bank account, your bank may require an EIN. And if you ever create a separate legal entity like an LLC, you'll need an EIN. That's the EIN. There we go. Okay. Yes, everything's on YouTube, like Noel said there. My husband Zoe, he's using mine, Zoe's Treasures. If you ever see Zoe's T Mod, that's my husband. He comes in as that sometimes. All right, let's take a look at the Form 4868 because I do want to show, for those of you who haven't filed yet, I want to show what you need to do really quick because you only got 5 days. So can we bring up that 4868, please? Let's zoom in, and I want to zoom in on the bottom of there where it says 4868. What Southern Charm said to renew every year. Trish, keep the form up there. We're going to talk about it. Trish, Southern Charm was talking about if you have a resale certificate on file with Whatnot, so you're not paying sales tax on Whatnot on your purchases, it expires annually. You have to upload a new certificate to Whatnot at least once a year, and they don't notify you. So you need to put a reminder in your phone or on your calendar or something to do that. If selling on Facebook Marketplace, do we have to allot a certain amount for taxes, right? Yes, selling on Facebook is no different than selling here. I would suggest if you have a W-2 job and Whatnot, or W-2 and reselling, about 18%. It's on average. You may owe a little bit, you may get a little refund with that, about 18%. And if you're doing reselling full time, you want to put aside about 28%. Okay, so I need a reseller certificate. You don't need one. It's an option if you want one. A reseller certificate, all that does is it takes, when you buy something to resell, it eliminates you paying sales tax on that item. So instead of you paying sales tax and then you sell it and they pay sales tax, you're just not paying sales tax. The end user pays that sales tax. It is not required. You want to think about it like this. What is your state tax? If your state tax is 7%, that's $7 that you're saving for every $100 you spend. So for every $100 in inventory you buy, you're saving yourself $7. So think about that in comparison to how much inventory you buy. Is it worth it or not? All right, I want to look at this form really quick. 4868, can we really zoom into where it says part 1 there? This right here, this bottom part, it's just as quarter of a page is the full extension. This is all you're filling out. The first part of it's super simple. We all got this down. We know our name, our address, and our social security number. That's the easy part. The difficult part comes if we scroll over to the other side of this form. Right here, they're going to ask you some questions that you're going to have to answer. They're going to ask, what is the estimate of your total tax liability? This is what I was talking about earlier. If you go back and look at your last year's tax return, there is a line that says tax liability. Well, that was last year's. The IRS wants to know, how much do you owe them this year? Because your extension only extends the time to file. It doesn't extend the time to pay. So you need to be able to figure out your tax liability. I'll tell you how to do that in a second. Then it's going to ask you, did you make any payments this year? Was anything withheld from an employer, or did you send estimated taxes in? Then it's just minus tax liability minus the payments. How much do you owe? And then they're going to say, how much are you going to send us right now? So that's your full extension right there. Can we scroll down a little bit? You see that word that says interest? It's going to talk about right here, late penalties and late filing. Again, your 4868, your extension only allows you, it's extending the time to file, not the time to pay. So if you pull up the 4868, it will detail, I'm not going to read every word of this, it's lengthy, but you can have up to 25% in penalties for not paying when you're supposed to be paying. All right, let's take that off. So that's it. It's a tiny little form. But the hard part is you need to be able to tell them what your tax liability is and how much do you owe, and you got to send some money in. Now, if you can't send all the money in, you're going to get penalized. There's no way to get around that. But send what you can. If you owe $1,000 and you can send in $300 with your extension, send in the $300. Obviously, the best thing to do is to send all of it, but that's not possible for everybody all the time. So send what you can. So if you're going to file a 4868, you have to figure out what your tax liability is. I'm going to give you 4 steps to figure out what this is. You need to find, and not just because you didn't file in 2024, and it sounds like you're kind of just starting, at least back from 2024, 25, the first year is always good to try to find a professional. After that, you have a completed tax return that you can kind of use as a guide to help you next year. So think of it, and the money you pay for your professional is tax deductible. So not for last year, but for this year, because we're in 2026. So it is a tax deductible expense. And think about it as education. It could be very expensive, but you're making sure you're getting a good start, a good base. It's education, and then you can work forward and work towards doing it on your own in future years. You weren't planning. Hold on, let me see what. Basically, you were in med school. That med school is pretty awesome. Started reselling in 2020, got your MBA, left med school, and somehow ended up with full-time reselling in 2024. Nacho, I would definitely say you might want to hire a professional just to get caught up. Let them help you figure out the mess, get caught up, and there are ways to lower some of the tax bills, and a licensed CPA can really help you with that. In just hearing the limited details of your case, I would highly suggest going and getting a professional just to get current, at least to get current. Okay, so if you're sitting there and you're like, okay, I got to file an extension. How do I figure out my liability? I'm going to give you 4 steps. Okay, it's not super difficult. Step number 1, estimate your total income. Get it as close as you can. Go high. I'm going to tell you to be conservative. So pull your eBay reports, pull your Poshmark reports, look at your W-2, pull your whatnot, get all the reports, add all that income up together, and then maybe add another $1,000 or $2 for what you forgot to include. You want to be conservative. You would rather pay a tad bit more in this instance than come up short, okay, on your Form 4868, your extension. So get your total income as best as you can do it. These 4 steps is something you can do in the next hour and get your extension filed, okay? This isn't a perfection. I'm going to do all my accounting records just right. This is a nitty gritty, down and dirty. I got to get this extension in way to do it, okay? So you're going to get your income. All right, then you're going to get your expenses. You're going to estimate to the best of your ability your expenses. Where I say on income to go high, on your expenses, go low. So take a quick look through your banks or your credit card. Hopefully you got a separate bank account for business. Do a quick look through there, add up the expenses. I would not try to add in anything else that you're not sure of. Again, you want to go low, okay? We're being super conservative. If you haven't kept any records and you're just trying to file an extension and send a little bit of money in to cut back on your penalties, we're being super conservative and we're just trying to get this filed. Then your next steps after that are going to be to get it all right, okay, before you file the return. So you're going to estimate those expenses, okay? You're going to take your total income minus your total expense is going to give you your estimated net profit. That's just a calculation. Then, depending on if you work for somebody else or if you're full-time, you're going to take 20 to 30% of that as what you owe and send that into the IRS. Now, is that going to be exact? Is that going to match your tax return when you get around to doing it exactly? No, it will not. Again, this is down and dirty. I need to send them something because I don't want to be penalized any more than I need to be. So I'm going to do the best I can. And then moving forward, after that, you're going to figure out when you're going to do that tax return, when you're going to get all your ducks in a row and get it done, and figure out how to keep your bookkeeping moving forward so you're not in the same place next year. Hopefully that makes sense, and maybe that gives somebody who still has to file a little bit of direction. Now, do we have any other questions? I'm going to do one more giveaway and see if we have any other questions. All right, I got a heart, so I'm going to take that as a good sign that maybe that was somewhat useful information for somebody. If you're at the point now where you're kind of scrambling, again, don't worry about the $6 receipt from Walmart. Go for the big stuff. If you're like, look, I got most of my stuff together, Tracy. I don't think it's perfect, but I really think it's logical that I can file in the next 5 days. But your books still aren't just right. Focus on the big stuff. Will you, maybe have a little bit of extra tax you pay? Maybe. You're going to leave some money? Yes. But focus on the big stuff. For a percentage of home business use, I use the basement. Okay, so what you need to do, the IRS allows you 2 methods, actual or simplified. I'm going to start with the simplified because it's simple. So you take the square footage of your house. We all know that. If you're not sure, you can look at your tax bill or look at Zillow, give you the square footage of your house. Then you take the square footage of your basement. Make sure that basement, all of it is used primarily and exclusively, are the 2 keywords the IRS uses when it talks about home office, for your business. If part of that home office or part of your basement has like a spare bedroom, that's your guest room, that doesn't count. So make sure it's primarily and exclusively used for your business. So then you get the square footage of your basement. You figure out what percent that is. So if your house is 3,000 square feet and your basement's 300 square feet, then that's 10%. Okay. So you're going to need to know the percentage. So what does that mean? 300 square feet. If you're using simplified, the IRS will just give you $5 per square foot, no questions asked, up to 300 square feet. So if you have 300 square feet, you can claim the whole $1,500 deduction. $5 times 300 is $1,500. It's $1,500 deduction. That's the simplified. Now, if you don't have 300 square feet, doesn't mean you can claim it. If you only have 200, you get $5 times 200 for your deduction. Easy peasy, okay? All business use, perfect. But that shows a larger percent of shows it as a larger portion of them. Only use what you're paying for, what your living space is, like the space that you rent for your landlord. So if the landlord's renting something else out, that's not yours. The actual method then is the same. You still got to figure out your percentage that it comes. So we're at that, 10%, whatever. And then you take all the actual expenses. So the portion of the rent, the portion of the utilities that apply to that, like electric, gas for heat. You can't count water if there's no bathroom there, right? But if there's a bathroom there, you can count water if the bathroom's part of your office space. If you painted the walls, the paint, so like maintenance expenses, insurance expenses. So you take all those expenses and then you're allowed to take 10%, the equivalent of that square footage of those expenses as your actual expense. I would suggest doing it both ways and seeing what is most beneficial to you. Now, no, there's a trade-off to all of this. The only reason the IRS is ever going to give you a simplified version of anything is because the regular version takes a lot of administrative bookkeeping to keep up with. So that's the only reason that they give you a simplified version. I don't have to keep all the receipts. All I need to know is my square footage, and I get my $5 a square foot, up to 300 square feet. Or I can do a lot of work on the back end to get a little more money. You got to decide what's best for you. If you have 310 square feet, and I can do the simplified version and get 300 of it, I'm cool with that. But if you have 600 square feet, maybe you don't want to do simplified. Maybe you want to take some extra time, right? So there's no like one answer for each person. It's really, you got to evaluate which one works best for you. How far back do we have to worry about doing adjustments? Getting myself better organized after an illness, but wondering if it's best to leave it be. So that's kind of a tricky one. because it depends what the adjustment is. And what does the adjustment mean? You owe money to the IRS or they owe you money? So which way is that adjustment going to go? If they owe you money, you never have to fix it because the IRS is not going to care if they owe you money. They will never come after you to say, we owe you, wait a minute, let me pay you. You don't have to worry about that. So the only reason you would want to do that is because, heck, I want my money, right? If you owe the IRS, and I've got to figure out the best diplomatic way to say this. If you owe the IRS, if your adjustment means you owe them, you need to decide, KM, you got that giveaway. Congratulations. What is the,
Congratulations.
how much do you owe, first of all? If you owe $100 and you're like, $100, it's going to cost me $500 for the CPA to do this back, to amend my tax return for me to pay the 100. Is it really worth it? Is the IRS really going to come after you? If they came after you for $100 and they charge you a penalty and interest, what would you really end up owing at the end of the day? Maybe 200? All right, I'm just going to risk it. Okay. But if you owe a significant amount and the IRS comes after you and be like, dude, you didn't pay me, and that could really add up with those interest and penalties, especially as time goes by, you may want to get that fixed and taken care of and get that paid. So there's not a clear-cut answer. You need to look at the situation and evaluate it for what it is. Is that your first time winning a giveaway? Well, congratulations. I hope that answered the question. It's and it's not how far back, like it depends what it is. And off the top of my head, I don't know the rules, but 3 to 5 years is usually how far back. There's certain instances they can go back to like 10 years. So it just depends on what we're talking about, personal, business, what type of return it is, on how far back they can go. Yeah, so there you go. Mainly, I would think mainly for your 1040s and your Schedule Cs, your personal tax returns, 5 to 7 years. Yeah, you're at 7 to 10, you're good. 5 to 7 is the normal. After 7 years, unless you're doing something currently that the IRS is like, they're auditing you and they have a lot of suspicion that you've been doing something bad for a long, long time, they're not going to keep digging in the past. And even if they were like this year to audit you, listen, most audits are a desk audit, or not even a desk audit. Most audits are like a correspondence. I forget the proper name, like a mail audit. They send you a letter and they say, on your tax return, you said this. Please send me the receipts or justify this expense. Or why did you put this? We show this. And you reply, you send them copies of your documentation. 9 out of 10 times they're like, oh, okay, cool, no problem. Talk to you later. Or they may say, I get you. I still think you owe me a little bit of money. Write me a check for $100. We'll call it a day. A lot of times those are what the audits are. Okay. It's a simple letter in the mail. You answer it. It's not like they're going to show up and pound at your door and pull out their guns and be like, show me your receipts. That's not going to happen. Now, as you get to larger audits, they could go deeper and deeper. So, and if they uncover one problem, there's a good chance they're going to be like, this person is doing this now. They probably did it last year and the year before. So look, if we're just doing what we're supposed to, there's nothing to worry about. They typically don't actively pursue cases of less than 200 on unpaid taxes. I'm not sure if that's an accurate number or not. It very well could be. But yeah, look, it's not worth their time. If you owe them, $2,000, you're probably going to get a letter in the mail because they're not going to send somebody out there. They're not going to do all this work to get $2,000. It's a business too. The IRS is a business. Whatever they do, there has to be a return on their money. They're not going to spend a bunch of money chasing something just to lose money in the end. So they have systems, they have thresholds. So it's not, people worry about audits. Less than 1% of the people who file tax returns are even audited to begin with. And most of those are the highest income earners that are audited. So it's not, again, do what's right, keep your receipts. There are a lot of gray areas when it comes to taxes. There are a lot of things that are judgment calls. Myself as a CPA, I'm very, very conservative. I'm going to tell you to stay on the safest side of the law that I can possibly guide you towards. There are other CPAs that are far more pushing the line, and they'll say, well, you could probably get away with this. It allows that gray area in there. Does the IRS collect a portion of what is owed off your behind if you're behind on paying? If you owe the IRS, they do have the ability, if you're not on a payment plan, to garnish your wages. They have the ability to retain any future refunds you may have. So yeah, they will take your money in any way they can. They also have the ability in certain cases and instances, they may have to have more of a court order, but they can also go after your bank accounts. But if you just owe them $1,000 and you set up a payment plan, you don't have to worry about that. You make sure you just pay them. It's like any other creditor at that point. No issues, just OCD about record keeping. That's good though. That's very, see, to me, I agree with you, Pretty Peach. Just keep your records and make sure extra little documentation never hurts. Because I don't know about you guys, I don't remember what I ate for lunch yesterday, let alone what receipt I had 3 years ago, right? So you don't get a W-2, and I don't get a W-2 and a small business seller with a few assets, but I do try to do everything up to, yeah. All right. Well, you guys, if there's no more questions, we've been on for a little over an hour. I think we're going to go. Friday night, I'm sure you all have much funner things to do than to talk about taxes, but I really appreciate you guys hanging out with me. KM, I'm filing taxes for 2025 and owe 2026, not a large amount, but enough if you need a payment plan to pay back. Will I have any problems filing? No, when you file, so go to for a payment plan. So when you file your tax return, whether you file a tax return or the extension, you're supposed to send in what you owe, right? If you can't, be proactive. Do it before the 15th. File your return, but before the April 5th. Thank you so much. That is so sweet. Thank you. Before the 15th, go to the IRS website. In their little search bar, type in payment plan. They explain it super easy. They have a couple different ways of setting up payment plans. Depending on what you owe and what plan, there's a fee to establish the plan. But if you're proactive, if you're communicating ahead of time and taking those steps to set up the payment plan, you're going to be far better off. Thank you so much. Y'all, you don't have to do that. I greatly appreciate it though. So as long as you're doing what you're supposed to and setting that plan up, you won't have a problem. And it's done right online. You don't even need to call somebody. You don't have to jump through hoops. It's super easy to do. Yep.
And also, you don't have to purchase anything to rewatch the show. We
Yes.
multicast to YouTube, and you can find it in that channel right there, and it's free. So don't feel like you're missing out on something and you need to purchase anything. Just go to YouTube, look for that channel.
Trish.
Everything is going to be listed right there. I put everything on playlists, so it's easy to find.
The giveaway is always one of my CEO affirmation cards. So I sell decks of 52 cards, but I give these away along with a vintage postcard. Can you pin the item for the spreadsheets again? Absolutely. Let's see if we can find that. So I'm going to pin the whole library, but you can also just buy individual PDFs. There's another listing in there for just the individual. I think the library is a better deal because you get access to everything plus anything in the future. But if you just want certain PDFs, there's a listing in there called Live Seller PDF and Excel files, your choice, 29 to choose from. Then you can just pick and choose. This is the library. So this is the one, this gets you access to everything. And then if you want to just buy one at a time, it's this one here. Let's see. I saw a question I wanted to answer up here really quick. I thought I did. I must have missed it. Thank you guys. Thank you for being here. And plan to use them. Oh, cool. I'm glad. Yeah, you guys feel free that if you guys get the CEO affirmation cards to, give them away, sell them, do whatever you want to do with them, put them up on your mirror and have an affirmation every week. Whatever it is that use that you want to do. So with that, we're going to go. I do want to say, this is what I was going to say. I just remembered. Did you want to say something? My husband's like,
When you get your affirmation cards, my suggestion is for you to look at them very carefully.
Yeah, we put a little surprise in there with them. For this Friday night show, so on our YouTube, all of our shows are on there. So over the last like 8 weeks of these Friday nights, I actually went through the whole Schedule C. So if you haven't filed yet or you just want to learn about the Schedule C, every week I went through a different section. So there's a whole show on no, not cash. That would be pretty cool though. There's a whole section on revenue, a whole section on expenses, home office, vehicle. So on YouTube, if you just want to do like look at your Schedule C piece by piece by piece, I have shows where we've broken it down, we've brought the schedules up, we've talked about it like line by line by line. So if you're still trying to figure out your taxes, that may help you too. I try to explain stuff in a pretty common, easy to understand way. All right, you guys. With that, I am going to go raid. Thank you all for being here. Have a wonderful Friday night. If you guys like vintage, I'm going to be on at 8 a.m. tomorrow morning with timeless and elegant vintage decor. So we'll see you next time. We're going to go see Dragonfly. Let's go see her tonight.